Hi, I'm Kiran Patankar. I'm President and CEO and a Director of Maple Gold Mines. Maple Gold is a Canadian advanced exploration and development company with a large multi-million ounce project called Douay in Quebec. We also have a project contiguous to that called Joutel, which is a past-producing high-grade mine. We control 400 square kilometers of prime land right on the Casa Berardi break in Quebec. We've executed some very smart transactions and undergone a complete company transformation over the past year, and I'm delighted to be here in Beaver Creek talking with Matthew today.
And I'm delighted to be with you in person. We had a good chat, I think, online a couple of months ago about this, transformative type restructure that you've done with Agnico. I mean, remind us about what happened there and the why.
Sure. So we've had and enjoyed a fantastic partnership with Agnico that dates back to 2020, 2021. They saw merit geologically in the project that we had, the district scale potential and the ability for us to potentially advance with smart exploration, a sizable resource already, so roughly 3 million ounces. They've obviously got infrastructure in the region. It's a center of production for them, over 2 million ounces a year of production, and they've got ample interest in seeing assets advance that sort of fit their criteria. We worked on that joint venture with them. We entered a smart transaction 50-50. They became a strategic investor in Maple, so we've enjoyed that relationship with them over the past couple of years and done good exploration work. However, the execution of drill programs, the way the company was presenting information, the processing of data, the honing in and driving on the unlocking of the Douay project wasn't being done, right? And that was reflected in the drill results, disconnects between the programs that were being outlined and the messaging that was coming from the C-suite at Maple. So we made a major change in the company's management. I became interim CEO almost exactly a year ago. I remember being here in Beaver Creek and wondering, how are we really going to turn this thing around? We've done it obviously with a lot of hard work. We've been staying relatively quiet in terms of, just executing, outlining a vision and corporate strategy and then executing on that. But we've done it with the support of Agnico. Right. And the transactions that we've recently announced in June, we announced obviously shareholder approval for those transactions earlier this week. They're value creative and demonstrable value for Maple because we control our own destiny on a 400 square kilometer land package. We've got the financing and the funding with Agnico investing in Maple equity at a premium and moving to a 19.9 shareholder position. We've got the funding to execute, and we have a better understanding of the geology because all that good work has kind of happened alongside of doing good corporate transactions. Yeah. We did good technical work, which I think garnered us a lot of goodwill, but also a lot of confidence with the entire team technically at Agnico.
And they've also got their kind of buy-in rights as well, which suggests they're interested.
They do. I think they see this as a long-term asset that very much meets their criteria. We have to go out and do the work of demonstrating that economic, project of scale, the art of the possible, like the geology is supportive, the structure's there, the infrastructure's there, right? But it is the responsibility of the junior company. In the case of the 50-50, we were the junior partner, but we were de facto operator. And the execution under the previous team was not there. I think we're set up now to really drive responsible exploration and development. I think that's going to be a multi-pronged approach. It's obviously got exploration potential, but we want to show how we're actually moving the ounces that we have into the economic, realm, right, where it actually is buildable, so we can demonstrate that there's actually value for a company like Agnico and others that are looking for quality assets in tier one jurisdictions.
It's an interesting point, this. I always talk to investors say, you need to invest in something with a good corporate structure. Mm-hmm. And they go, well, what do you mean by that? Is it the management team? It's partly the management team, but it's also the kind of the shackles which sometimes they put on themselves. I think the previous structure may have worked at one time. It may have sounded like a good idea, but in sort of difficult markets like we've kind of been through, you kind of need to be able to express yourselves, and you need to be able to put yourself in a position where you can get rewarded. Absolutely. By the market.
Oh, yeah.
And I just don't think that was happening for you. So this structure feels like it's the right thing for now, for you. What are your expectations of what you can do now?
Well, I think, and you're absolutely right. I mean, you need to show that you're getting value for like a 50-50 JV with Canada's largest miner and the second largest gold miner in the world. It's fantastic because you see that there's work that's done into verifying and vetting the potential of the asset and does it meet certain criteria for becoming a a tier one, asset at some point. But 50-50 JVs, there can be sometimes with a major junior senior partnership, there's always going to be, potentially some different priorities, right? Because we have a largely retail shareholder base, right? They look for, constant news flow. They look for all those things that, junior companies typically do. When you set out to do something fundamental here, which is get back to first principles, do good geology, drive better drill targeting and exploration results that actually move the needle and materially advance the project, which is in Agnico's interest, but is also in our interest, our stakeholders' interests and shareholders' interests. You got to go a little bit quiet, right? You have to actually process that data. You got to say to the investors, we've got a great land package. We've got an excellent playground, but we're not here to promote it. We're here to actually build it into something meaningful. So what did we do in parallel? We did a smart deal. We doubled our ounce count. Like a lot of companies are out drilling holes, and this market has been pretty punitive to junior companies, even when they have the best drill results. So certainly, as an exploration company, our focus is going to be on drilling and exploration, and we intend to do that as early as soon as the ground freezes this fall. But via smart transaction, with a great partner and with their support, we've been able to double our ounce count, right? From 50% ownership of a 3 million ounce deposit to now 100% ownership. Yes, they've got a back end. It's based on criteria that I think are achievable for us and in a relatively, sort of midterm, near to midterm in terms of scoping a project that reaches those thresholds of $300 million of NPV and pre-feasibility, those things. Like that's the goal. Or exceeding that is actually the goal. Yeah. But I think now we can actually go out and show, I don't think we get full value for 50% of a 3 million ounce resource, much less 100% of it. I don't think we get full value for the playground or the land package or the blue sky potential that we have along a first order structure in a very prolific, one of the most prolific gold regions in the world. And I don't think we get any value for the project that Agnico contributed, which contains their namesake, their Agnico Eagle, because of the Eagle mine, which is part of the Dutel mine trend. And we haven't really gone out and done systematic exploration along that trend. We have the ability to do that now. We've got the funding, we've got the knowledge of the geology, we've got the team in place as well, because you do need a team to execute. And again, this is all, it's not just me saying this, it's also the conversations that we're having here in Beaver Creek with our investors, right? We're always happy to come here to Colorado. This is old stomping grounds for me, being an ex-Colorado School of Mines, it's my alma mater. But, we met with Agnico, we've met with a number of institutions, shareholders, and both existing and new potential ones. And they all want to know, look, you've done all this good hard work, you've got 100% control, you've got the funding to execute. What's next? And that's what we're excited to talk about.
That is the big question. And you make a good point. Just to finish off on like in a corporate structure, 50-50 sounds equitable, but it's not when the companies have different profiles like that. I think the new structure will make it more equitable in the sense that you can control your own destiny and get after things that you think are right. And if you want to make it attractive to an Agnico Eagle as a 19.9% shareholder, it also means that I guess this competitive tension will still be there, as in other players can maybe come in and look at this too. So I like that, and that's the kind of setup. Now we've got to do the baby steps, right? You've mentioned a whole bunch of the variables which you now are in control of, or mostly in control of, and the data that you've got. So what are those incremental baby steps which kind of move this thing forward? And what do people need to understand? What is valuable today, and what will be valuable in the future?
So again, with the structure that we have, our ability to go out, outline drill targets, we do vet these targets with our partner. That was part of what we talked about when they were at site with us, early in August. But
are they still active then?
They're still active, yeah. The technical team, you have a world-class operator that has extensive knowledge in the region. So it would be a miss to not leverage that, right? Because we've got a great relationship here. Obviously, they're a strategic partner. They've got institutional knowledge of the deposit. So,
well, that makes it more real to me. And that's a good point, right? Because I see this a lot where you kind of got a major in there. It's kind of like they got 20, 30 of these things lying around, and on paper it looks like they're involved. They're not involved. They're busy doing other things, and they've got they let this thing drift. It sounds like they're on the ground, interested in what you're doing. It's their backyard. Why wouldn't they be? So psychologically, I think investors should really lean into this and go, well, I can read something into that.
Yes, but again, what we are always focused on is, while we have this great partnership, the work has to be done by us and by our team, right? So when we talk about what are the catalysts, we didn't drill last season. Of course, it was a relatively warm year in the Abitibi. So while the markets obviously weren't really rewarding companies that were aggressively drilling, there was also logistical challenges with operating. We run in an area of glaciated terrain. So, you do need the ground to be frozen to really properly execute a program, particularly in the Douay resource area. So we utilized the time that we were looking at the data that we had, going out, looking at 250,000 meters of drill core, reevaluating all the multi-element geochem, plotting all that information, presenting it to our partner, talking amongst our astute technical team, and enhancing and augmenting our technical team to bring the right skill sets in there to actually execute. So catalysts that investors can look forward to, and this is the conversation we're having out here at Beaver Creek, is we're going to resume drilling, but we're doing it with the benefit of smart money that's just come in, with clear objectives, with a better understanding of the geology, and it's dual focused, right? Because the money that's going into the program, it's flow through, it's got to go in the ground. So we're looking at something in the neighborhood of a 7,500 meter to 10,000 meter program, right? At an average all-in drilling cost, including fixed costs and personnel, of somewhere around $350 to $400 a meter.
That's high, right?
But we're also, while we're doing smart exploration drilling, we're looking at the 2022 resource model with SLR, looking at putting better geologic constraints on that resource with the understanding that we've built over the system over the last year. We're looking at opportunities, the layering that I think you and I talked about last time, about putting an economic filter. Like, sure, there's a massive endowment of gold and a playground, but honing in on what is economic, and really starting to do, internal. At first, it's going to be internal scoping level studies, but I could see a pathway, as most juniors have followed. We don't want to necessarily enter into the development part of Lassonde curve yet, right? Because we've got a playground and we've got more to explore here. But I do think with the goalpost that's been set of what is a project that sort of meets the criteria for Agnico to back in under this restructured JV, it's a $300 million NPV project, right, with a pre-feasibility study. So it only makes sense for us to, while we're doing systematic exploration, also do use our engineers, use our the development-oriented team that we've put together, not just the good geologists, but also the Ian Cunningham Dunlop, who's a PN, who's done more advanced project development, Darwin Green, who's done similar things, who's just joined the board and sold a company to Contango recently, very successfully. Myself, I'm an engineer, right? I'm a geologist, but I'm also a geological engineer, and I like to build things, right? So we're going to start to really look at what of the deposit we've got that can actually, be a buildable mine.
Yeah.
And we've got 100% control in our own destiny on systematically exploring a past producing high-grade mine complex in Joutel. Doing it obviously responsibly with due respect for environment, social, all these other things, as we do with all of our work. But that type of program has never been done at Joutel. And we don't currently, in my opinion, as I said, I don't think we were getting full value for the ounces that we had on an attributable basis. Now we've doubled our ounce count. I think we're even cheaper. We're at $6 an ounce attributable. But there's a broad land package and there's a past producing high-grade mine complex that, really is just icing on the cake, right?
Yeah. So it sounds like they've got this team to cater for all options ahead of you, right? I guess what I'm interested in, if as an investor, I'm going, well, what am I actually investing into? I get the optionality. I get the fact that Agnico Eagle is still involved, but there's this kind of role that you have as CEO now, where you've got to talk to the market and show them how you're going to build value, i.e. actually attributable value, either through the market cap, enterprise value, share price, whatever metric you choose to use. And then you've got this strategic partner who's just under 20% shareholder. You want to be talking to them. You know what they want, right? You know what they want. And you can say, well, I can build to that, or I can come up with my own end game here. So it would seem, I guess, remiss not to build what they want, build out to what they want.
Yeah.
But at the same time, people want you to sort of take control of this as well and say, well, I want this competitive tension. I want other people to lean in and say, well, maybe that's a better model compared to maybe what other, your strategic partner wants. there's a lot of conversations going on, right? And with at board level, with your strategic partner, etc. How do you map your way forward through all of that? That's a dance, isn't it?
That is a great question, and that is what I spend the majority of my time thinking about from a long-term planning standpoint with Maple. One of the benefits of what's a great partnership? It's where each partner contributes something equally, but they allow the other party to be who they are. Right. Mm-hmm. So we are not a senior producer. We are a junior exploration company. So,
and what you're also not is their exploration, company either. You're not here to do their exploration, I would argue.
Well, we're here to do good exploration, and we learn from somebody who's doing it
your
best.
Own man. You're your own company. Do
Correct.
You know what I mean?
Correct. That's the thing is we have to set our own course, but when investors are looking at the value creation, and we've seen, by the way, in with this run up in gold price, it hasn't necessarily translated to, re-rates, for example, in the junior gold space. We know a lot of junior companies are struggling right now, and we certainly feel that we're undervalued, but I think most of my peers would say the same thing. I think what's unique is as we enter into a new phase where you're starting to see smattering of M&A, right? You saw Goldfields make a big entry into Quebec with their proposed acquisition of a Cisco. There is something about assets that are in tier one jurisdictions with infrastructure, with government support, right? Where they have the scale, to be, large producers at some point, right? Where they've got the right geologic characteristics. There's something about high quality management teams and high quality technical teams that can both execute corporately, but also advance a project, not just by executing drill program to drill program, but by moving a project along in terms of, what we need to do at this point is, to be honest, we've done the complete, transformation, Maple 2.0, different company and everything, but the name Maple Gold. We need to show people who are familiar with the Douay and Joutel projects that there's something that maybe they didn't know about the project, but that everyone's kind of missed, right? Because we know, for example, look at Great Bear, look at some of these more successful Snowline companies that were either looking maybe in the wrong rocks, right? Or they were, looking for something else and they found a different type of mineralization. All of a sudden, these are where the major discoveries, the only junior companies that have really garnered any value in this market are the ones that have come out with, they've done the homework, they've done their good geology, they're a bit of a, as we all are, entrepreneurs, and sort of saying, okay, how do we create value? But we have all that potential here, right? So I kind of look at this and say we can learn from the good work that our partners have done, and they give us all the resources and time, which is amazing because, again, they have a lot of priorities, and that's what we have to always be respectful and cognizant of.
I am, and they've got their own timelines, which I know you're cognizant of because, when you're ready to move, they may not be, and the waiting game is not a good game to play in this market, right, generally. So can I come back to the drilling bit?
Sure.
Okay, so we're about to embark on a kind of winter drill program.
Mm-hmm.
You're sitting with a whole stack of data at the moment. So is this the case that this drilling is going to do what for you? Is to say, we're going to increase the ounces, all categories. We're going to increase the quality of what the 3 million ounces we've already got. We're going to, maybe look for new discoveries. What's the end game with this allocation of capital now?
So let's be frank. $4 million we just raised. It's not a $10 million program, right? It's not a 25,000 meter, 50,000 meter, infill drill program. So I think we need to demonstrate with this program, first of all, we can execute, right? That this team that we have, we do it on time, we do it on budget. But I also think the goals of drilling are threefold. We've got resource expansion targets. They're near the existing resource at Douay.
Virgin at the moment, not drilled
largely
before.
undrilled.
Okay,
There's lots of white space, for example, in the geologic model. The geology is permissive, but there's also this idea that if you drill here, we're starting to think, and we're training our team and people to think, what does success look like? Is it a open pit target that we're drilling? Is it a, bulk underground target that we're drilling? Is it a selective high grade underground target that we're drilling? Because you can kind of start to think about with, costs, with gold price assumptions, with other sort of parameters around development, what types of grade and grade thickness intercepts would actually constitute success in those drilling. And that's how you rank and
it's
tier,
a great phrase,
right?
Right? We're talking now about economic geologists, not someone going through a science project here, for the sake of, let's say, if it's just execution to what end? That's what I'm interested in.
Yeah. Well, and I think you do need, this is the balance. I mean, we talk about this with the layers of partnership with the 50-50 JV, now 100% control. There's nuance in all of it, right? Coming up with the right deal structure. People can always poke holes in any project. They can poke holes in any deal, any structure. But while we're focusing on adding the economic filters of really advancing a proper mine development project, we also need the wide-eyed, out of the box thinkers, right? I mean, that are going to help to unlock the puzzle, find the Rosetta Stone. And what was really rewarding about our most recent site visit was our team had the opportunity to really present that work that they've, it's not easy work to when the ground is cold and the snow is flying in Quebec. You're going out to the core racks. You're pulling core off the racks that haven't been pulled since 1985. And, it's in core boxes are falling apart. You're putting it in new boxes. You're cleaning it up. You're actually going through and relogging it, putting it in sections, doing all this stuff to systematically rebuild. I mean, I give our team, and I really love the team that we built because that was hard work, right? And it doesn't necessarily, demonstrate something flashy to the market, but it is fundamental. And when you deal with, a major company that knows how to do exploration and knows processes that lead to success, to be able to demonstrate that, we have far fewer resources, obviously, than a major partner, right? But we still rolled up our sleeves and did the work. I think that garnered us a lot of not just respect, but also goodwill. And I think at the end of the day, we do know in this industry when again, investors are looking at this drill program, objectives, all these other things, but I also invite to take a step back, look at the junior sector as a whole. Which of the companies that are out there are ones that are primed for success? You got the right structure, the right rocks, right management team, technical team that can execute, and they've got the backing of someone, a company that's actually relevant, who's got operating and incentive to actually see these projects advance, right? We tick every box there. Plus we've got infrastructure, and then we happen to be in a very progressive, mining-friendly jurisdiction in Quebec, where we, for example, to take $4 million of equity investment and get $1.6 million coming back in the form of mineral exploration tax credits. I mean, that's almost unheard of in most parts of the world, right? So I think the execution is up to us, but starting from today, looking at what we do, I still think in today's gold market, with, sort of nascent M&A on the horizon, investors and corporates are always going to be selective about the kinds of companies that they target, about the types of management teams that they can work with. I mean, you and I have got to know each other pretty well over the last couple of months. I mean, there's a people aspect of this business as much as it's a rocks, right? And so I think it's mentors that I've had in my career. It starts and ends with the rocks, and everything else is relationships. So when it's taken, for example, 7 months to execute, a back-end, option and conveyance agreement with Agnico, restructuring, financing, sure, we could have lost patience at any point there because our market wasn't getting a lot of news and there wasn't a lot of information sort of saying, we kept saying, look, we're working on something, stay with us. But we worked at the timeline of our partner in the spirit of partnership because we knew that their intentions were genuine, as were ours, right? And because we did that, the relationship is only stronger. And again, I think, as you said, they're a shareholder, right? They're a large shareholder. They're the largest shareholder of Maple, but we have many shareholders, and my interests are always furthering the interests of our shareholders in a responsible manner. So creating growth, coming up with a strategy and executing on that, it's going to benefit, if we're successful, it's going to benefit Agnico, but it's going to benefit every shareholder who's invested in this company. And it's a sea change from the trajectory and the direction that we were in, when I took the helm just over a year ago.
That's for sure. That is for sure. Like, get out there, deliver what you do, what you say, and say what you do. That's
my mantra, right? At the end of the day, I am only, I've had the benefit of a lot of, both personal and professional mentors. And because the people part of this business, why I love sitting down with you and I've been really enjoying building the relationship. But, at the end of the day, we have to look ourselves in the mirror and say, do we believe we're adding something to this? If I don't see that I'm adding value, if I don't feel in my heart that I'm growing this and I'm investing in it alongside shareholders, I will find another place to be. but we are far from that point. We've got a lot of run room ahead of us, and it's going to be exciting fall and winter for sure.